Essay 260. Communication with those charged with the governance. Difference between those charged with the governance and management. Those charged with the governance meet periodically. They supervise the performance. They take strategic long-term decisions. They decide company policies. Whereas management implements policies, take responsibility of day-to-day operations. Types of those charged with the governance. Those charged with the governance may not be integrated part of an entity. Example, Defense Ministry will be the those charged with the governance and ISRO board will be the management. In this case, those charged with the governance is not an integrated part of entity. Those charged with the governance may be integral part but completely different from the management. Those charged with the governance may be some persons can be common with management. And last case, those charged with the governance and management can be same. Auditor need to identify those charged with the governance. If organization structure has committees, auditor will communicate with them. They are called subgroups. Identify committee with the responsibility of oversight of financial reporting. If auditor is not satisfied with subgroup, then he may communicate with governing body. When those charged with the governance and management are same, it happens in small businesses. If matter already communicated to people with management or responsibility, no need to communicate it again with those charged with the governance. If auditor feels all persons in those charged with the governance does not have adequate information, then communicate again to such person. Matters to be communicated to those charged with the governance. Auditor's responsibility. Expressing opinion, do not relieve management or those charged with the governance. The auditor's responsibility need to be communicated to those charged with the governance. Overview of planned scope and timing of the audit need to be communicated. Significant findings like significant difficulties, significant matters, written representation with auditor's request, significant qualitative aspects need to be communicated to those charged with the governance. Significant qualitative aspects. There are three significant qualitative aspects. Aspects means parts. AED. A. Accounting policies, accounting estimates, disclosures. Regarding accounting policies, accounting estimates, and disclosures, he need to discuss with those charged with the governance. Next, circumstances that affect audit report need to be discussed. Any other matter relevant to oversight of financial reporting process need to be discussed. Next, matters only to be discussed in case of listed companies. Engagement team and other comply with relevant ethical requirement regarding independence need to be communicated to those charged with governance by the auditor. All relationships and other matters which may be relevant for independence need to be communicated. Total fees for audit and non-audit fees need to be communicated. Safeguard to eliminate threats to independence need to be communicated by the auditor to those charged with governance. Significant difficulties. What are significant difficulties that the auditor need to be communicated to those charged with governance? Brief time for audit. The client has given only small time, short time for audit. Restrictions imposed by the management. Unavailability of expected information. Significant delay. Extensive unexpected efforts. Management unwillingness to make or extend going concern assessment. In some circumstances, it may constitute a scope limitation that may lead to modification of auditor's report. So, because of these significant difficulties, in some cases, auditor may modify his report. Next, communication related to key audit matters. As per SA 260, communicate key audit matter on timely basis to those charged with the governance. Timing of communication of key audit matter. Appropriate time vary with circumstances. Preliminary view of key audit matter. Communicate when discussing planned scope and timing. Communication with the draft of audit report. Draft of audit report with the key audit matter will be useful for key audit matter discussion. Benefits for auditor. A robust two-way communication on key audit matter. Communication recognizes their important role. Those charged with the governance. Consider new and enhanced disclosure in financial statements. Opportunity to understand key audit matter and obtain further clarification.